Let's take a look here as we look at the stock market on the 60-minute chart of the S&P 500, and you'll see what happened during the week. And notice in there, I'm actually showing last Friday also, so you can get a sense for the moves that are going on in the market. Whereas every single day, so this is 6 days in a row, after a decline overnight, you can see in here the decline overnight on Monday, the rally on Monday, the big break here on Tuesday, and the rally on Tuesday during the trading session, the rally here on Wednesday during the trading session. This was a big decline on Thursday overnight. You could see really big, and it still tried to rally here, but then failed on Thursday, and you can see on Friday also. So there's your example of how there is a lot of buying that's coming in every single day during the market and during the regular trading hours. Take a look here, and you can see on Monday, trade war, China retaliates, the yield curve gets flatter, and that big sell-off came. Here, the president warns of $200 billion more in China tariffs, and that brought a big decline. ZTE crashed again based on the Senate funding deal and how it affected that. Here, the Russell really led that rebound. You can see that. Small tech's leading the rebound right in here. You look at this little dip. You see that? This is where the Eurozone said that they would hit the U.S. with retaliatory tariffs. That didn't stop the move very much. This was the big news in here. And when Daimler comes out and they said that tariffs are going to cut into their earnings. And we saw some declines coming in the auto stocks when that happened. And then here's that boost we're getting here as energies are moving up. As the OPEC comes out with that news and the supply of oil won't be as big as people had feared, we had a big drop in the oil. And the recovery that we're getting today of $3 on the upside still is a minor recovery when it comes to where it's fallen from 73 down to 64. So here we are now at up about 68 and in the oil market, and that's a minor recovery, and it is helping the stock market right now. So there you could see selling overnight, buying during the day, and that really is the story of the stock market this week. All right, short-term view for the coming week. Before I get into that, I want to tell you about our Level 2 membership, an educational opportunity that I think is that almost no other site, that almost no other trading pro site brings you anything like this. Our Level 2 membership is where our videos live. And I want to just give you an idea of what's in there. If you want to learn charting, just from basic charting all the way through very involved charting, we don't teach cycle charting in there. That's really in our workshop. But what we teach is many studies. We look at some of my favorite and best studies and combination of studies on the Thinkorswim platform, which are representative of studies that are on most platforms. And I teach how to use all of those in all of those videos. We have 72 videos just in the Tools for Tech section in there, which teach about charting, teach about technical analysis. If you want to look at very unique trader psychology videos. I've been a coach, a facilitator in personal growth work for the last 22 years. So I bring a blend of what I understand about being a trader and about the emotional side of trading into these videos. There are 23 videos in there that are just absolutely outstanding about the personal side of trading. You're going to want to see that. Our style, strategy, and plan, a category of videos, that is just like it says. We talk about style, we talk about strategies and how to, things about your trading plan. These are some of the basics of trading in the market. We have 33 videos in that section alone. You also look at our big picture analysis, our stock sectors video, which we do a couple of those a month, where we look at opportunities in individual stock sectors, like we talked about this week, 31 stocks that are extraordinarily overbought that have been leading the market, that are due for pullbacks. We do all of those. We have our IRAMO, which is for longer term, and of course the archive of our market weeks. We have 8 different categories of videos, well over 300 videos in there, and it's an educational resource that you have never seen. In addition, if you subscribe to that, you get our stock index report, which culls down our very involved cycle analysis in the indexes. 3 of them, the S&P 500, the NASDAQ, and the Russell, share our charts with you. We do that on Thursdays and update it as necessary. We show you all of our momentum indicators and even give you a peek at our proprietary indicators. All of that, can you imagine all of those 300 videos, the stock index report? Level 2, I really want you to see this. Half price for 1 month, all the watching you want to do. If you don't like it, if it's enough, just cancel it after that. You don't have to renew. But $18.50, that's it. For the whole month, binge watch, do everything that you want with that, and then if that's enough for you, cancel it. If not, you can stay with us and continue to use it when it renews. $18.50 for the video stock index report. Send me an email, slim@askslim.com, and tell me that you are interested in seeing that. I'll even send you a stock index report to look at so that you can see that too at no cost. So you can get all of that, a free stock index report. We'll just let you look at it. And $18.50 for all of our videos and the next month of all of that in stock index reports. Slim@askslim.com. Don't miss this opportunity. I've been at this 44 years, a facilitator for 22 years, a coach for like 30-something years, and I'm going to share that with you for this price. It's just crazy. We're doing that because we want you in the family here. We want you really to see what we do and learn from us and really use our knowledge for your benefit. I have been saying that there's a correction coming, and I thought it was going to be deeper, and now based on the strength of the low caps keeping the market lifted, that narrowed the window of time for the correction. That really only gives us about something like 2.5 to 4 weeks of time for a pullback in here. And I think in this window, we're going to lose 3 to 5%, as I think I said twice before in this show. I'm going to show you how that sets up. As the stock market, I showed you that hourly chart earlier, and it's starting to give some ground right now. So it's not in trouble yet, but you're going to see why I think that it may be soon. So the focus right now is on that big dashed line that you can see right over here. This is the NASDAQ and the Russell. They line up together and somewhat out of phase with the S&P 500. S&P 500, we're looking at a little different pattern. And you can see right in here, this is a 14, 15-day cycle. Now note this low, 14 days from the previous low. 14 days from the previous low, 15 days from the previous low. Perfect cyclicality that you can see right in here. Very nice. And then the next rally phase. But look what happened. It already started to roll over. This has been, these fib confluences, turning out to be a very important spot where the market failed, and now it's having a hard time getting up again. We think it's about to move towards the downside. You see the minor resistance here? We think that the upside is about 27.75 that we're likely to see if the market can gain footing. If it breaks this level, which is, we'll call it 27.43, 42, something like that, it will have entered this next declining phase, and it will have all the way out over here till mid-July that it will be in that declining phase. That is this period of risk based on the NASDAQ, the Russell, and now the S&P 500 joining in. We're going to call this week a potential of an attempt at this level at 27.75. However, we think it's going to fail, and that will also break this level right in here of 27.42 during this week. So it's kind of chop around in here, break this level, and set up another 2 weeks after that of this corrective period that we're looking at. So we're going to look for this week being somewhat of a narrow, choppy week, and then eventually resolving itself to the downside into this corrective period where we have all of these corrections going on. And those of you that get our charts and see that weekly period on those charts, the intermediate period that calls for this decline into mid-July also. So we have this alignment going on of corrective phasing that suggests that between now and mid-July is a period of high risk. And I think it's very reasonable to expect 75 to 125 point loss in the S&P 500.